What's up guys, Americana back here with another video. This week's videos are going to be a little bit different as we are going to completely disregard the current crypto charts altogether. In each of my videos this week, we are going to be deep diving on the macroeconomic picture and reviewing each specific reason why this bear market is simply just not adding up. So let's go ahead and dive in. All right guys, like I promised, I'm going to completely get off the Bitcoin chart here. And the first thing we are going to look at is real gross domestic product. If you guys don't know, simply put, this is the growth of the economy in real terms, meaning it is adjusted for inflation. And before we dive into these charts, I want to kind of explain my reasoning for these videos this week. I feel like up to this point, we've been rather contrarian, and we've been wondering why things like Bitcoin dominance, others priced in Bitcoin, and Ethereum priced in Bitcoin do not add up. Honestly, that only goes so far and only works to reassure you guys when crypto prices are remaining elevated. But honestly, I don't think there is a single other crypto investor on the internet who is looking at the economy in a deeper picture. So I want to dive into the charts that I see important, as well as go over my reasoning why I'm holding all of my current positions. So with that out of the way, let's dive into some more charts. So I'm going to try to break these up across multiple videos this week. The first video, or this first segment here, is going to be about we are in a healthy economy. And this is going to frame up multiple things that you'll see get wrapped up in each video. I'm going to tie each of these videos back to the credit cycle because that is ultimately what is the most important thing in getting super risk on assets like crypto to start moving. Not only that, but we'll go over some of the reasons why the market might feel rather heavy right now. I promise you guys, I'm really not a perma bull type of person. I really don't even want to be making videos like this. I would much rather just tell you guys it's a bear market, sell everything, walk away, come back at the bottom. But I have to stay true to the data because in time, that's actually what's going to age the best. So like I said, we have real GDP here currently at 4.4%, which is utterly astounding in my opinion when we talk about GDP and GDP growth. And if we just take kind of this mean area in here, where most of these bubbles typically end up forming, it's in that like 2 to 2.5% area. All right, looking at some times that GDP has struggled. Obviously, COVID, we had a little bit of negative growth. And then into January of 2022, this was when we had a little bit of negative growth in GDP. We saw that reflected in the stock market, where technically we were labeled as a recession with 2 quarters of negative GDP growth. And then most recently with the tariff, little blip down of negative GDP growth in the scares. So those are some times to kind of think about. Obviously, this one lining up with when last bear market came into play. But then if we look at, 2018 and 19, we did not have any negative GDP growth in those bear markets. So we can't really blame the bear market that came in on that. And you'll see that reflected in other videos here. Crypto is super reflexive of all of the things in the underlying economy. There's no passive flows into crypto. There's a little bit with ETFs. And so it's really keen on a lot of the macroeconomic factors that we'll talk about in this week's videos, as well as keen on the credit cycle itself. So again, I've kind of rambled on now, but 4.4% on real GDP growth is rather outstanding. The next thing we are going to dive into is industrial production. All right, this is another industry, another sector of the economy that is very heavily reliant on inflows, on capital investment. When people are investing in production, they are confident in the longer term outlook of the economy, that they are going to get returns on that production, as well as that what they're actually producing is going to be bought. So we'll see that when it comes to consumer spending and things like that. But on here, so we have the INDPRO. This is a total production index essentially. But what you really want to focus on is this rate of change here at the bottom. So if you guys don't know, when we look at something like CPI literally just goes like this, right? Inflation is always here. It is always eating away at our dollars. But what we typically look at when it comes to CPI is the actual rate of change. So that's what people will say, 2.8% CPI year over year, 2 point this, 2 point that. They're actually talking about the rate of change down here. And all of this is important. These videos are going to come out at different times, but all of these kind of tie back into what the Fed is going to do, what the Fed has to do in some cases, and how that's going to affect crypto. So make sure you guys do stick around, watch these videos in depth, maybe take note. Make sure you check out my other videos this week because I mean, this is pretty heavy stuff. This is all very, very, very important. And why, honestly, as long as we have these factors in play, I'm not too keen to call it a bear market. I'm not too keen to say we are in some sort of macro bear market in crypto. So if you notice, I have marked out these peaks in Bitcoin. I actually want to move this over here. I want to actually move this to where everybody is essentially saying we're at in a bear market. This is the January of, January, March, April, May, whatever it is, 2020 fractal. If I went to a similar point in other bear markets, you can see we kind of slide down here to where we could potentially be, right? Somewhere in here, somewhere within the bear market. And what are we seeing on total production at that time? I do want to point out in some of my videos this week, right, this data here from 2011, 2013, 2014 is a little bit bogus just because we were still recovering on a macro sense, the housing crisis, but we do have two really good prints to look at, two really good cycles to look at, and that I think are very, very, very important. So I'm going to move this back here just so we can see this a little bit better. You can see when we did get to these points where we were in the bear market, we had our peak. Let's say we already had our peak in here, and now we're somewhere over here. We had already seen some negative growth or some declining growth in production. We had production sliding into here, obviously coinciding with Bitcoin's bear market. And you can really see it in 2021 where we had a massive slide in production into that bear market. Right? So if I go and grab this here and again put us where we could potentially be at, you can see production, total production had already been continually sliding into that level. And these are just some kind of basic macro charts that you do need to be aware of. But currently, I mean, what do we have here? Production is doing just fine, curling up, accelerating, rate of change accelerating. Nothing to worry about in this sense at all, which I find very, very, very interesting. And again, this is just not one chart we're going to be looking at, but multiple charts here. So the next one is going to be durable goods orders. All right, this again has to do with production. If people are not ordering those goods, if people have no demand for those goods, producers are not going to be producing them. They're looking at stuff like this in the sense of, oh my goodness, are we going to have somebody to buy these goods? Are we going to have somebody to purchase the stuff that we are making? And that's going to affect the amount of investment that we're going to put into our production. I feel like that's pretty obvious. So let's go ahead and mark out some tops in here. Okay, we're just strictly worried about Bitcoin as it's going to be most sensitive to these kinds of things. Try to be precise in here. Okay, and you can see this one's very, very clear. We have durable goods orders. I mean, absolutely sliding off the face of a cliff into this bear market in here. We go and we slide over the bear market. Everything is sliding into this bear market. And that is just, again, not the case. Even if we look at these charts up here, this thing is purely accelerating. I do want to point out this rate of change doesn't mean up or down in the actual chart. It means the pace that it's accelerating or even declining at. But even when we look at this chart right here, I mean, this thing is taking off. Durable goods orders are skyrocketing. We see that reflected in the rate of change here. And again, just not something that we can point to in any past cycle as being a dynamic that was at play. We've talked about Bitcoin dominance. We've talked about others BTC. We've talked about ETH BTC. I mean, we've talked about plenty of things, but now diving into the more bigger picture, I think this stuff should be rather clear. Also in line with production and just overall economic health, what do we have here is retail sales. This is nominal retail sales, meaning not accounting for inflation. Both of these charts pretty much show the same thing. So just to keep things a little bit more concise, we'll go ahead and work off of real retail sales. So real retail sales, similar to real GDP, is going to adjust for inflation. And in an economic sense, that's always what you want to look at because you want to look at the real numbers. You do not want to look at anything skewed by inflation. But again, what do we have? What do we have after, this peak? just a general slide in real retail sales as this thing begins to slide off. You can see that much more clearly in 17 and 18, right? That peak comes in and those real retail sales begin to slide off, especially as we enter deeper phases of the bear market. This thing again has begun to slide. Very visible in 2021. What do we have? Hit this kind of inflection point. Literally, you can see the inflection point in the chart. Where that comes in is right at Bitcoin's bottom. We've been nothing but accelerating since then. We have no reason to think that this thing is tapering off. And these are just kind of some general outline things. We will tie this back to the credit cycle in each video. I went through some of the stuff that I'm showing you guys on my live stream with members the other day, and I think it really hit home when we actually took a look at how this tied back to credit. Just keep in mind those factors. Just keep in mind that those are a little bit different than what we've seen past times, that we do have healthy numbers in the economy. And now once you realize that things are not sliding, things are not on an unsustainable path, now we can go ahead and relate it back to the credit cycle itself. One more little quick basic chart as we get into it. So currently we're looking at PCE. This is the Fed's preferred measure of inflation. If you guys have been living under a rock, you should know that inflation has been nothing but down. Fed has done a great job of curbing that, almost to a fault, almost to the point of an unhealthy economy via the labor market, which we'll talk about in other videos this week. But just looking at PCE itself, what do we see in past cycles, right? Is this run up in PCE into the peak and then a decline. This run up in PCE into the peak. Once we are in this bear market, I suppose I could have slid this over. Once we are in this bear market, again, we begin to slide. PCE begins to slide. See this run up on PCE into the peak, and then we see this slide. We have not had a run up in PCE because inflation has not been a thing this cycle. Why has inflation not been a thing this cycle? Since we were at the bottom, Fed has either been increasing rates or remaining flat the entire time. That has caused, liquidity to be a little bit crunched, credit to be a little bit crunched, and why we've seen this kind of slower, less volatile, more subdued cycle, in my opinion. I don't have time to make a video on it this week. At some point, I will. When Bitcoin breaks all-time highs, I'll cover it on why I never believed in the 4-year cycle. Ultimately, it's going to come down to Bitcoin's movements are going to come down to what we talk about in the videos this week. Maybe not so much what we're covering in this video, but definitely when we talk about credit, when we talk about inflation and liquidity and things like that, and how it's entering the market, when it's entering the market. Bitcoin is very, very heavily reliant on that. It is a high beta asset of these, macroeconomic factors. But again, PCE is a missing part of this story. Now, if the Fed, or in my opinion, when the Fed starts cutting and we inevitably see inflation start rising, okay, likely coinciding with some sort of blow off top in crypto and equities and things like that, I promise you, by the time we've had a little pullback and maybe we're in the same situation that we are currently in now, to get that off, that we're currently in now, we will have seen inflation sliding. We will have seen durable goods sliding. We will have seen production sliding. All of these things sliding into the bear market, which we have typically seen in past cycles. And that, again, is just not something that showed up. We are 2 steps behind when it comes to PCE on the hike on PCE into the top, and then the taper off that comes after the fact, right? Into that bear market. This is my chart of choice when it comes to tying things back in to the credit cycle. What we're looking at here is HYG. This is high yield corporate credit ETF. This is very, very risky corporate bonds. They are obviously going to have more yield. And this is billions of dollars, trillions of dollars chasing this money, right? This is big institutional money, bigger than ETFs, bigger than the stock market. The bond market is absolutely massive. The credit market is absolutely massive. This is some of the smartest money in the world. This has some of the most sophisticated investors in the world. And typically the credit market is going to sniff out economic hardships before other areas of the market does. And we can actually see that reflected in this chart. So this is a great one for you guys to add. It's extremely simple to look at. It works just like bonds. So as this chart is getting bid up, those yields are shrinking, and as it's getting sold off, as less people want these riskier corporate credit bonds, you'll see this chart fall off, the yields will rise until demand returns. So this one's super simple. I have everything marked out. I actually have my momentum indicator tagged on this, and this is tagged to this corporate credit bond chart that we see up top, and how well this times up with movements in the market is almost uncanny in my opinion. So you can see by the time that we had topped, one, we had got this massive bid up in corporate credit. We had also been rolling over for months on end. Okay. By the time we were in a what people are saying is a similar place in the cycle, corporate credit had already rolled over. Corporate credit had already rolled over on the monthly time frame even. And we see this cycle after cycle, right? We see this massive run up in corporate credit, indicating a very risk on liquid environment. By the time we had corporate credit had rolled over, by the time we had rolled over on my momentum indicator as well, this is the monthly time frame, billions and trillions of dollars in these types of bonds, the market was already cooked. Same thing in 2013. This should really, like I said, when I showed this to members and stuff like that, this really honed in the point. But when we see corporate credit, again, the credit market, the debt market is going to sniff out these things much sooner than any Bitcoin cycle is going to, much sooner than any of these things are going to. And it's going to roll over, and that's going to coincide with a little bit nastier liquidity conditions, credit crunches, just less money in the system in general. Now, what's something we do not see this cycle? One, we had an amazing close on the month, like an amazing close. This thing closed up. There's more demand for these corporate credit bonds. There's no indication of rolling over at all. Okay, momentum on my chart is a little bit rolled over. But if we take when this peak came in, and this actually rolling over into the peak is not uncommon. This rollover, right, into the peak, this rollover into the peak in Bitcoin, right, is not uncommon, right? You see this already having rolled over a little bit into the peak here, but the point is kind of disproving being in somewhere like April, May of 2022, and this is actually each cycle, Bitcoin cycle, when we had actually already crossed negative on my momentum reading, again, monthly time frame, and we have plenty of space to bounce around in here before we inevitably get this cross. By this time, corporate credits probably rolled over, but what's also probably happened, again, expansion coming from the equities market. All right, I made videos last week talking about Bitcoin, or talking about gold, showing you guys how that's a risk on rally. That is a speculative rally. That is not a fear-driven rally. And corporate credit is reflecting that. Corporate credit would be shrinking if that was a currency issue, or if that was a fear issue or something like that. Corporate credit would not be getting bid up by some of the biggest money in the world if gold was acting as a true hedge, which I pointed out that it was not. I think we'll go ahead and wrap it up right here. Like I said, in each of these videos this week, there's going to be a lot of information. What I want you guys to get from this is not, screw the price calls, screw the price targets. We've talked about that enough. We've talked about Bitcoin's Bollinger Bands having not expanded. We've talked about being in this low volatility regime. We've talked about Bitcoin dominance not being in a similar place. We've talked about others BTC not being in a similar place. We've talked about ETH BTC not being in a similar place. Now we're talking about billion-dollar sections, trillion-dollar sections of our economy also not being in the same place. And this all ties in together. This all works together. In other videos using the same logic and using, some of the material that we talked about in this video, we'll talk about what the Fed's next move is. And honestly, I just truly believe the data is showing us that there is an injection of liquidity. There is a release valve on the market that has yet to be turned. I think corporate credit is showing us that as well. And when that happens, it doesn't matter where it comes from on Bitcoin's price. It doesn't matter if Bitcoin gets to 60K. It doesn't matter if Bitcoin gets to 50K. When that happens, it is going to unleash liquidity on the market. There's going to be a melt up that nobody saw coming. And we'll be able to look back and say, that's why Bitcoin dominance was where it was at. That's why others BTC was where it's at. That's why all of these dynamics look so odd, unlike any other bear market in crypto, because everything on the back end was setting up for this massive injection of liquidity. Smart money was loading up on these altcoins. Smart money was rotating into Ethereum. Smart money was doing all these things. Smart money was buying dips on Bitcoin, anticipating some sort of injection of liquidity, which I do think is coming, which we will cover in other parts or other videos this week. But this is just kind of an introduction to some key dynamics, kind of an explainer and showing you guys an example of how the videos are going to go this week, looking at some of these macro indicators. Again, in each video, I will tie it back to credit. We'll talk about as well what the Fed is going to be doing, how that could potentially impact crypto, and essentially why this cycle is looking rather different. Doesn't mean I'm sticking around until 2028, 2029, but it does mean, hey, we're not crazy for looking at Bitcoin dominance and wondering why it hasn't done what it's going to do, why we haven't had some sort of blow off top in crypto, because it's simply waiting on these factors to line up and everything is looking healthy. So if you guys enjoyed this video, make sure you check out my others this week. And if you guys want anything from me, you guys can ask me any questions you need. Seriously, I think people are scared to ask questions or worried about asking questions. I make these videos, I do these because I want you guys to ask questions. I do have a free Discord as well. The link for that is in my bio. And if all that sounds good to you, see you guys in the next one. Peace.